Hello everyone, myself Raghu SD from Tally Solutions Bangalore. We welcome you to the webinar session on GST compliance for your business in Tally ERP 9 Release 6.
Agenda. So we are going to discuss about few things about GST concept, terminology used in GST, types of return and filing date, benefits in upgrading to 6.0, and then product walkthrough. So this is the agenda of today's session, which will end with question and answer. Okay. Why GST? There are few reasons why GST is required in India. The first reason is it's a simple tax structure which eliminates cascading effect. Simple tax structure is, as you know, each state currently VAT has their own way of collecting tax from the end users. So GST is one rate across the country, correct? So hence it is simple tax structure, eliminating cascading effect. It's not tax on tax. So it's like excise plus VAT, VAT plus service tax. The current regime is like that, but from GST onwards, only GST, there is no cascading effect. Technology driven system. As you know, as per GST Council, there are 6.5 to 7 million traders are going to upload their returns on 10th of August, something but succeeding month of July, 10th of, something but nearly 65 to 70 lakh traders are going to file the return. So to verify those returns, actually manually human cannot be done. Hence it is technology driven, where you will upload your outward documents, inward documents, which will be invoice matching happens, and system will provide you the information about you. It is a technology driven system. So finally the best reason is it increase revenue, first for the government, next for the traders, however for the end users, nothing but for the consumers. So hence GST is required for growing economically for the country. So highlights of GST. The first highlights of GST is common threshold limit across the country, correct? So threshold limit is nothing but who's supposed to get registered under GST, which is common across the country, and continuity of tax credit across the supply chain till it reaches to the consumer. So if the product is manufactured till consumer, whichever the hand, how many hands get changed also, each and every buyer will get input tax credit. So if you take example of current regime excise, the manufacturer will sell to trade dealer. The dealer cannot avail the input of excise. He has to add to his cost. That is not there. Now there is no concept of manufacturer or dealer or trader. So it is simple supply of goods or services. Okay, so each and every one will get an input credit in supply chain till reaches to the end user. And the third reason is eliminating of tax cascading effect in supply chain. This we already discussed. There is no tax on tax, only GST. And it's a PAN based registration. So each and every trader has to get registered, which is based on the company PAN number. This we'll discuss in future slide later. And it is on supply tax liability instead of removal or sale. Okay, there is a difference between supply and sale. Sale invoice is nothing but you will just make the sales transaction. So in current regime, immediately the buyer can take the input credit. So here after supply only the goods has to be delivered, then only tax liability will arise. And few other valuation method broadly as transaction value. It's nothing but in the invoice, apart from the product value, if you are charging anything else, assume that transportation, insurance, any other charges you are charging, so you need to ensure that that will be added to the product value, then you need to charge GST. That's called valuation method, broadly as transaction value. Now onwards, each transaction with regard to branch transfer is taxable, and immediately it can be eligible for input tax credit as well. tax eligibility on inward supply of goods service for interstate transactions. So till today it was not there. If you are doing interstate transactions, you need to collect CST, right? If you are buying from outside state, CST was your expenses. So now onwards, on interstate transactions also, on GST also you can take input tax credit. Hence, no declaration form with regard to Form C, Form F. Now we'll discuss about threshold limit. So for the regular dealer, there is a special category states identified by the GST cell, which is Arunachal Pradesh, Assam, Manipur and rest of the states which is showing in the slide. These are all the states. Aggregate turnover, if it exceeds 10 lakh, then they are supposed to come under GST. So aggregated is nothing but in Arunachal Pradesh itself, if the trader has 2-3 branches, so consolidated branch turnover is about 10 lakh, then they need to come under GST era. So if not, it's a user choice whether they can register or not. The mandatory is they should come under GST if the turnover of per annum is above 10 lakh. So rest of India, the aggregate turnover exceeds 20 lakh. Okay. Composition levy. So for composition levy, so aggregate turnover, if it not crossing 50 lakh for special category and 75 lakh for rest of India, then they can come under GST. Okay. So what are the advantages and disadvantages for a composition tax? Not applicable for taxable person who is engaged in supply or service except supply of food or drinks for human consumption. They will not be opt for composition tax. And supply of goods through electronic commerce operator. If you are tagged with Amazon or Flipkart, then you will not be able to opt this composition levy. Interstate sales, outward supply. Nothing but if you are selling your goods outside that state, then you are not eligible to opt composition levy. And also the composition dealer cannot collect tax. The GST tax cannot be collected from for himself and cannot claim even input credit. So even if the composition dealer is buying from registered dealer, if the purchase invoice has a GST is charged, even composition dealer cannot be claim the GST input credit. Okay, and applicable for all the transaction under the PAN. Rate of tax is for manufacturers 2%, nothing but monthly turnover who is into manufacturer. If he is a composition dealer on the turnover of manufacturing, then he has to pay 2% GST to the department. For the traders 1%, and the last one is supply of food or drinks for human consumption. It is 5% based on the turnover. They have to pay 5% to the GST. Okay, the check here is tally in tally release 6.0. The calculation part can be done. However, statutory with regard to filing of return is not possible in the current release. Okay, I'll move to next slide. The tax under GST. What are the tax under GST? The first is CGST. It's nothing but stand for Central GST. Tax collected by central government, applicable on supplies within the state. State GST. State GST stand for SGST stands for state GST. Tax collected by state government, applicable on supplies within the state. UTGST stand for Union Territory GST. Tax collected by Union Territory, applicable on supplies within the Union Territory. As you know, in India, we have identified 7 Union Territory: Andaman Nicobar, Chandigarh, Dadar and Haveli, and Delhi, Lakshadweep, and Puducherry. Out of this, Delhi and Puducherry can charge SGST instead of UTGST. So rest of the states, if the transactions are happening within, assume that in Chandigarh, you will buy from Chandigarh and you will sell in Chandigarh, then you need to charge UTGST and CGST, not SGST. Only Delhi and Puducherry, as they have a constitution, then only those two states can charge only SGST. Apart from that, remaining 5 states has to charge UTGST. And the last one, is IGST. It is stand for GST. Tax collected is shared by state and central. Applicable on interstate and import transactions. Assume that you are selling from Karnataka to Maharashtra. So then IGST has to be charged, where IGST tax will be divided into state and central. All these will discuss more when we go to product, then you will be clear. So this is just an introduction about tax structure under GST. What are the tax subsumed under GST? So as you know, currently VAT, service tax, excise, many other taxes are there. So what are the tax going to subsumed under GST? Excise duty, ADE, service tax and surcharge and cess will be subsumed under CGST, and VAT, purchase tax, entry tax and luxury tax on surcharge and cess will be subsumed under SGST or UTGST. And the last one, CST, CVD and SAD will be subsumed under IGST. Put together, so it is single tax called GST. Determination of GST, intrastate. How you will understand what kind of tax you need to charge if it is a intrastate. Intrastate is something but within the state. So the location of supplier and the place of supply. This is what GST says. Based on the place of supply, you need to charge tax. If both are in one state, assume that both buyer and seller is in Karnataka, then charge of tax is CGST, SGST. See, for all the commodities, the tax has been already declared, correct? In everyday newspaper, we are seeing on the mobile it is 12%, on milk it is 0%, correct? For product, already tax has been defined. So only you are going to charge the tax from the buyer. If it is 12%, if you assume that you are selling a mobile in Karnataka, 12% tax, then 6% goes to CGST and 6% goes to SGST. Is that clear? So this is how it will be calculated. Now we will discuss about interstate, nothing but state to different state, location of supplier and place of supply. If location of supplier is in Karnataka, place of supply is in Tamil Nadu, interstate will be charged. It's called IGST will be charged. Here the tax will be divided. So when the consumer is in different state, then that state will get that revenue. In this scenario, Tamil Nadu will get 50% and remaining 50% will be taken by central government. It's not Karnataka is going to get the benefit here. Mandatory registration, who's supposed to come under the registration? So taxable person carrying interstate supply. Nothing but if you are dealing with outside state, then you have to come under registration. Casual and non-resident taxable person is nothing but in a financial year, you may do sales transactions for 2 or 3 months. But however, if your turnover is above the threshold limit, you should come under GST. And non-resident taxable person, the person who is staying outside India, occasionally he will visit India and he may conduct some event or exhibition. If the turnover is above the limit, then he has to come under GST. Business liable to pay tax under reverse charge. As you know, reverse charge is nothing but on behalf of buyer, on behalf of seller, you are going to pay tax. So in this scenario, nothing but goods on transport, GTA. In the scenario of GTA, so you are going to raise the liability and pay the tax. So in the reverse charge, you have to come under GST. Agent supplying on behalf of taxable person supposed to come under GST. Input service distributor, you have a head office and few branch offices. So if you have input tax in head office, if you are sharing with across your branches, then in that scenario, you need to come under GST. And person responsible to deduct tax, if you are deducting TDS, assume that you are paying for professional charge or paying rent. When you are deducting TDS, you should come under GST. Seller on e-commerce platform, if your business is selling through any online e-commerce operator, then platform, then you need to come under GST. Even e-commerce operator must come under GST. Okay, so this is the mandatory registration for the traders. The last one, online information and data retrieval services like Google and any data retrieval services also supposed to come under GST. Next, goods and service tax not subsumed under GST. There are few tax which is still continue even if GST is there. With regard to central tax, custom duty, when you are importing from outside country, custom duty need to be paid, and other tax. And with regard to state, road tax, passenger tax, toll tax, property, stamp duty for registration, those things will continue. The important one is the services. It is petrol, diesel, crude oil, aviation fuel, natural gas, and alcohol for human consumption and power sector. If these three still it is outside GST, still VAT and excise will continue for the third section. Okay. Terminology used in GST: outward supply, nothing but intrastate or interstate sales transaction. We call it as outward supply. Inward supply, intrastate or interstate purchase transaction. And GSTN is nothing but GST identification number, which is 15 digit including PAN. The first 2 digit is specific. It's specify the state. For Karnataka it is 29. Similarly for Maharashtra it is 27. So this is the company PAN number, and the next 13th digit start for entity. If you have a one registered company, it is 1. If you have a more than one company, nothing but if you are having 2 kinds of registration. One is with regard to restaurant, another is with regard to automobiles. Then if you have a 2 entity, then it will be 2. And the Z is by default Z. GST cell has not defined anything, and the last one is checks error code. So this is how the 15 digit of GST number is given to the traders. So place of supply, location where in the service is rendered or goods are supplied. These are the terminology we have used in GST. So now we'll discuss about what are the types of return and filing dates under GST. The first return need to be uploaded to the GSTN portal on 10th of succeeding month. Nothing but from July GST is implementing means August 10th supposed to upload GSTR1, which furnish details of all outward supplies of taxable goods and services. Nothing but simple. Whatever sales and service bill you have made for the month of July, those details you are going to upload. It's an invoice level detail you are going to upload. The second one will be automatically provided by the GSTN network based on the GSTR submitted by your supplier. Correct? So you might have bought from other suppliers, the GSTN return they have uploaded. So based on that input, so auto-populated GSTR2A will be given to you on 11th of every month, and GSTR2 is nothing but all inward. It's nothing but for the month of July, how many purchase transactions or service transactions you have availed. Those need to be uploaded to GSTN portal on 15th. Correct? So as you already got GSTR 2A, you can go through, and if you want you can make necessary changes and you can upload to the department. Correct? All the purchases whichever you made, system itself will provide you the information. You can add or edit and you can upload GSTR 2 on 15th. By 17th you have to accept something, but if some alterations are happened, if some alteration were suggested by the recipient, that need to be accepted, where you have only 2 days of time. 15th and 17th only you have 2 days time. Within 2 days you have to upload the GSTR 2 if it is amended, that need to be uploaded. So on the last one, on 20th, GSTR 3 will be issued by the GSTN network. Based on that, it shows after invoice matching, it shows what is the input tax credit you availed and what is the tax you need to pay. Then with the GSTR 3 form, so all the trader has to make payment to the GST. Okay, this is how the forms have been right. Benefit of upgrading to release 6: easy conversion of data, simple steps for master configuration. You can invoice and generate invoice as per the statute, and extract required reports and returns. So now we will go to product and we'll experience the data migration, configuration, master setup, transactions, and report and filing. Fine. So I'll go to product now. So assume that you are getting a data from 4.93 and you are installing and migrating to 6.0. Open the company, select the company, and the first it asks, need to convert your data to open it in the version of Tally ERP 9. Your data will be automatically backed up. Begin data conversion, say yes. Immediately it asks for the backup. So by default, Tally suggests the path, Tally data backup. So you can take the backup. So currently this automatic backup mechanism itself is going to change. Why? Because if you have in the data folder, if you have 10 company, one by one, the backup will be taken one by one when you are migrating. So TBK file is generated. Second company, when you are migrating, it is user tendency that they may overwrite the existing one. So hence we are coming up with the other logic to ensure that each company backup is stored. Okay. So now I'm going to accept this. It's asking for override backup, which I'm already having. I said yes for the demo purpose. Now after rewrite and the migrate, it says GST is now enabled for national traders. So you can click here for the more information, which will take you to Tally help page. Just enter and then it will take you to the F11 F3 statutory field. First information you need to provide is your GST number. So okay, my company belongs to Karnataka. I'm going to specify GST number. You can see here, if my company is Karnataka, if I press enter, it will continue. Assume that if state is Maharashtra, as the state code start for Maharashtra is 27, Tally will show a alert message saying that invalid code, state code for Maharashtra is 27. For each and every state, we already prefix this. If user is trying to accept, it is just an alert, it will continue. User has to change it to correct GST number. I'll change back to Karnataka. User has to change the date to GST starts date, that is 1st July 2007. By default, this date shows book beginning from date. Okay, you need to ensure that this will be changed to 1st July. Okay, and the next option is set alter GST rate detail. If you enable this, you enable this option only if your all commodities or inventory belongs to one rate of tax. Okay, this is very important information. Please make a note. If your all inventories are belongs to one rate of tax, then it is easy to configure at company level. Assume that you have 100 types of inventory you are dealing, out of which 90 are belongs to one rate and 10 are belongs to different rate. Even though you can configure for all 100 from company level, then later go to item or stock group and change those 10 to the respective tax rate. If not, if you are dealing with 500 inventories where each and every tax slab is applicable for your business, means then don't do any configuration here. Then you can do it from tax rate setup screen. Is that clear? So now this is easy to show, which will applicable for all the stock items. So I want you to learn how to do tax rate setup for group wise. I'll show you. Hence I will not enable here. Enable GST classification. Tally has provided sales and purchase possible required classifications. Apart from that, if you would like to create few more, you can create. Okay. So the last one is provide LUT bond detail. It's nothing but if you are doing export transactions. Okay. So if you have a letter of undertaking, then you can specify the details here and applicable from and to. It's per annum you are supposed to pay to the central government with regard to this bond if you are into export business, correct? If you have this bond, you need not to charge IGST. For export transaction, you need to charge IGST. If you have a bond, you need not to charge. If no bond, you have to charge IGST. This is the law says. So we'll see the export transaction without LUT bond and with LUT bond as well. So now we'll not enable here. Done. So after enabling, go to display, statutory reports, GST, and here GST rate setup. This is the next step after F11 feature. Come here, you can see there are stock groups showing here. If you click on Alt F1 detailed one, you can see each group has a set of stock items, correct? So you can one by one, you can select and you can configure. I'll select by pressing space bar. I'll click on set rate. I'll say computer accessories. You have to specify HSN code. So there is one more option, is a non-GST good. We discussed in the slide, right? If you are dealing with outside GST product, petroleum or alcohol for human consumption or power sector, if this specific group belongs to that, you can enable, otherwise just ignore this. And taxability, is this exempt, nil rate or taxable? So we'll assume that this is taxable. Is reverse charge applicable? Is the group of stocks reverse charge is applicable? If so, you can make it yes, otherwise leave it blank. And there are few stocks for which input credit cannot be availed. So if so, you can enable. If you are eligible to input credit, then you can leave this field no. And now the important configuration has come, integrated tax. So it is nothing but IGST, central tax is nothing but CGST, and state is nothing but SGST. If you are specifying any type of rate, as you know, there are 4 types of rate under GST. One is 5, 12, 18 and 28. Another one is 3 for golds. So if you specify integrated tax and hit enter, automatically central and state will be equally divided, correct? If you specify 28, by default it will take 14, correct? So if you are doing sales transaction within state, you are paying 28, however, you are going to collect CGST, SGST. If you are doing interstate transaction, then you will collect 28%. However, as a trader, you are going to pay 28% only. The tax will be divided equally by central and state. So here also we have an F12 option where I have enabled all the options. So whichever is not relevant, you can disable. Next, if cess is applicable, you can specify, otherwise you can leave this field blank. Accept it. Now you can see for all the stocks under accessories, the tax has been set. Now immediately you can go for invoicing, the tax will be calculated. Similarly, I'm going to configure for components as well. This is done. So after components, I'll go for, you can even select multiple group also. You can see I have selected 3. I'm going to set some name I have given, HSN code. So here I'll set tax rate of 18%. 99 is divided. It is updated. And the last few, I'll just specify high rate tax. %28% I'll set. Correct. So now you can see all the stocks under the groups have been configured. Now after configuring tax rate setup, then you need to update party GST number, correct? This is very important to update the party GST number, could be supplier or debtor. So you need to update from this menu. So by default, based on your previous data, the country state would have already selected, then remaining details you need to. So the here question is, are we providing any tool? Nothing but Excel import provision. So we are thinking about to provide one add-on. So if you want any help with regard to that, from Tally itself, you can click on help. here we have provided GST topics. From here you can see setting up GST rates, and this you can refer. If you click on view all with regard to GST, whatever the articles we have published, it shows. You can see here with regard to the current configuration, here is the one. So you can see import of party GSTN. So there is a provision to import. However, we are going to upload one add-on here. So if you click on this, it will take you to download page from where you can download one add-on that can be configured. So from Excel import provision we are providing. If not, if you are okay to specify the GST number of parties manually, you can. So this is also based on the code. If you specify, assume that I'm specifying a GSTN code. You can see here, as I don't know about Arunachal Pradesh, it says it starts from 12. So I'll just edit this to 12. And next, Karnataka, I know it starts from 29. So like this, so you have to specify the GSTN number of the party. So after this, I had done for few. Immediately you can go for invoicing. I'll just show you passing one transaction. So after party detail, we need to create 3 duty ledgers. Don't edit the existing VAT or excise or service tax ledgers. Create new duty ledgers, CGST or central GST. Under duties and taxes, select GST here, select central tax. Don't specify anything here because we already defined in item level. So next, create SGST. It is state GST, and last one is IGST, integrated GST. Correct? So go for an invoice. Ensure that the date of invoice is 1st July because GST is applicable from 1st July. So I have selected this party who is in Karnataka. So I'm going to make one sales transaction, create a new sales ledger as well, sales account. Need not to enable any other required detail for GST. Then select any stock item. We already defined the tax for this. If you select SGST, tax is calculated. CGST, it is calculated. If we select IGST, it will not calculate. Why? Because my company and buyer company both are in Karnataka, correct? So based on the state, the tax is calculated accordingly. See, I have selected Badam as well as shampoo. Both are belongs to different type of tax. However, as it is a local sales, CGST, SGST are calculated. Even if you try to select IGST, which will not calculate. You can see here. Correct? So now if you check the tax analysis, which shows clearly, you can see here. So 6% of rate for Badam and shampoo is 28%. Okay. So now if you print this also, I'll just remove IGST, which is not required. I'll go for saving this invoice. After that, so I'll go for a print. There is a F12 configuration under which with regard to GST we have given few options. Let me enable all the options. Tax classification. Here is the one. Your GST number. tax classification. So here is the tax classification based on HSN code has been shown here. So now for your reconfirmation, I'll just show you the tax rate setup done in this company. You can see for the beverage selected 18%, for fruits and nuts it is 12%, grains and pulses it is 5%, and toiletries it is 28%. Okay. So now, as we done one transaction, it is business to business. I am also registered dealer, and the person who bought from me, he is also registered dealer. If you go to statutory report GST, GSTR1, it is coming under business to B. The important information I would like to convey here is whatever the row it is showing here, it is according to the GSTR written 1 format. Okay, Tally's default view is this, correct? If you remember tax computation, correct, VAT computation, where this was our actual view, we have designed the program in such a way the terminology used by GST in the written form we are matching. B2B means what, B2C means what, how to capture we'll tell you. But however, apart from default view, so which is very useful for users if they are comparing the value against the GSTR 1. I'll show you how to pass interstate sales transactions. Okay, we'll identify party who is belongs to different state. You can see here the Kerala distributor. What we will do, Kerala distributor will add GSTN number for Kerala distributor. Either you can add under GSTN under GST report, or else you can add it here regular dealer. So Kerala, I think it starts from 36. Let me check. It starts from 32. Okay, 32 is for Kerala. Okay, if the parties belongs to deemed export or SCZ, okay, that you have to capture here. The rate of tax is same. However, so when you export the GSTR report, the relevant box will capture these information. Is your party's deemed export? It's nothing but what is deemed export? I'll tell you. If you are selling to the organization which is belongs to export oriented company, correct? Belongs to export oriented company, and your goods will be sent to outside India directly. It's nothing but instead of you export, the company whom you are selling, that is the export oriented company. Are you selling to export oriented company? Then select as deemed export. If you are customer, or if you are a dealer who is in SEZ, special economic zone, then select the relevant option, or else leave the field blank. And the last option is your customer is a e-commerce operator? Something but are you selling goods to Flipkart, Amazon? If so, make this option as. There is no change in tax. However, GST wants information in GSTR1. Let me make one transaction. If I select CGST, it should not calculate. If I select SGST also, it should not calculate. Why? Because my company is Karnataka and party company is Kerala, correct? So in this scenario, we need to select IGST. You can see only IGST is calculated. We are ensuring that user cannot do any mistake. So hence, the accurate report will be filed. Here also, if you check tax analysis, it shows the tax analysis. Okay. Now I'm going to save this transaction. If you go to the report, it shows under here. You can see here there are 2 counts, out of which B2B, interstate or local sales, whichever it is business to business, then there are 2 sales. You can see for the Kerala distributor, IGST, for local it is CGST, SGST. Correct? So now we will understand what is this. These 2 row 6th and 7th belongs to interstate sales, consumer or unregistered dealer. Simple. Okay. If you are selling or if you are dealing with registered dealer, all local and interstate will capture under B2B. if you are selling to interstate sales, if it is a interstate sales, selling to end user, consumer or unregistered dealer, then department wants to know if the transaction value is below 2.5 lakh, it will capture in 7. If the transaction value is above 2.5 lakh, it will capture in large. Is that clear? And one more is, even if you are doing local sales within the Karnataka, within your state, if the buyer is belongs to unregistered dealer or consumer, then whatever the amount above 2.5 lakh or below 2.5 lakh, it will capture under small. Simple logic they use. They wanted to know if it is interstate sales above 2.5 lakh, they want to track. If it is local sales, they don't want to bother. I'll make few transactions and show you. Consumer, correct? If the transaction value is 2.5 lakh and above, it will capture under 6. If the transaction value is 2.5 lakh and below, it will capture under small. Okay. And another one is, within the state, if you are selling, if the transaction value irrespective of 2.5 lakh above or below, it will capture under small. Okay. I'll make 2 transactions. I'll show you, then you will be clear. Fine. So now I'll create a party, Mr. Arjun, who is in Karnataka. I'll define him as a unregistered or consumer, anything. Okay. It will not ask registration detail as he is a end user. Correct. Now I'll create one more. Kiran. He is outside Karnataka. So I'll say Maharashtra. For him, I'll treat him as a unregistered dealer. Here also registration detail not required. Correct. So now we will make sales transaction. So for Arjun has a local, I am going to pass sales transaction. $5 lakh transactions. Even though I collect CGST, SGST, and now I'll make one more transaction for Kiran, who is outside state customer. You can see it's a small amount. IGST is calculated. CGST if you select, it will not calculate. Why? Because it's the interstate sales. For same Kiran, I will make one more transaction. $5 lakh transaction. If I check the report, you can see 5 lakh, Mr. Kiran, who is a outside state customer, his transaction is about 2.5 lakh, hence it is captured here. Under B2C small, even though Karnataka customer transaction is about 2.5 lakh, it is considering under small only. However, Maharashtra, the customer belongs to Maharashtra, interstate sale small is capturing here. Okay, next I will pass one international sales transaction. So we'll see one party, Arvind Traders. We will make him as outside India customer, UAE. So where registration detail is not required. If you are selling to outside India, assume that I am selling this to outside India. CGST will not calculate because law says if you are doing export, you need to collect IGST. Okay. So then, if you check the transaction, it is captured under here. There is some mismatch. What is that mismatch means? If you are doing any export transaction, the HSR code should be 8 digit. You can see here, I'll just specify some 8 digit number. It's capturing here. Is that clear? This is how you can do. So next is deemed export, right? So deemed export, while passing transaction, assume that I'm passing to Cool Joint, who is a local dealer. What law says is, irrespective of interstate or intrastate. If you are selling to deemed export, then you have to collect IGST. I'll select the product. In F12, if you are overwriting, there is an option we have given, allow modification of tax detail. If you make this option yes, then you have an option to override. I'll select. This is tax classification by default Tally has provided based on selection. You can see here deemed export, exempt also is there. If you are dealing with the product which is exempted, that you can select. If it is taxable, select deemed export and you can select IGST. The tax will be calculated. Even though you can observe party belongs to Karnataka, correct? Your company is also Karnataka, party belongs to Karnataka, even though IGST is calculating. This is how the product has been designed. LUT. Similarly, see, if it is LUT, I'll show you. You are selling to outside India customer. You can see export LUT. If you select this option, or you can create separate sales ledger also. If you select this option, even though it's an export transaction, as you already paid for the bond, IGST is not calculating, not even CGST. LUT means you already paid for the bond, so hence you need not to collect tax from the buyer. Okay, so I just explain you one more thing here. You can see when you are saving the transaction, there were three options. Why? Because the stock item supposed to be, it's a taxable item, right? Bath soap could be 18% or 12%, supposed to be taxable. As you are overrated, nothing but in F12 you enabled override GST and you selected as LUT, right? So hence it is asking, do you want to accept this and later you are going to resolve, or now itself you will resolve? As you are sure, you can say resolve, then the values will be captured in GSTR accordingly. And there are other two. If you go through this, nature of transaction, taxable are modified, correct? When you are modified, you have to re-accept that. So HSN code not specified. So specify the HSN code. If it is a outside state transaction, it should be 8-digit. So this is how relevant information will be captured here. And next I'll show you with regard to credit note. It's nothing but sales return. If your party is returning any goods, we'll check one invoice, the same invoice where we'll return that, correct? So Cool Joint, the invoice number 1 on 1st July. So Badam and shampoo, this we are going to return, correct? If your customer is returning this, okay? So it's an 100 quantity of both, and the value is 100 rupees, and shampoo is 200 rupees. So Cool Joint 1st July invoice number 1. So this we are going to receiving from the customer as a sales return. So for the sales return, ensure that you enable credit note in F11 feature, and then go to sales invoice, credit note. You need to specify the original invoice number and the date, then select the party, and as you are not doing any overration of tax detail, you can disable this. If required, you can use it. So now Badam 100 rupees, and shampoo, right? So it is 100, 200 rupees. Now CGST as well as SGST also, tax also need to be reversed. Here against reference you have to knock off that invoice number 1, 36,800. Here also it is matching, you knock it off. Once this is done, you can go to report and you can check the credit note is showing here. Okay, now I'll show you nil rate invoices. So if it is where nil rate is nothing but you are not charging any tax. In the scenarios are, if the stock item itself is nil rated, so it exempt is different, nil rate is different. What is the difference? Currently, for the specific stock, tax is not defined. It's called nil rate. Currently, GST, under GST, it is allowed to pass as a nil rate. So future they may come up with the tax structure. Hence, till that it will be charged nil rate. Another is exempted. Is they already declared. For example, egg, milk. These already they declared as exempted. Correct. So, and another one is non-GST good, correct? We already discussed, even though if you are dealing GST goods as well as non-GST goods, for non-GST goods, definitely you are not going to charge any GST tax. Hence, department want to know how many such transactions you are doing. One transaction I will show you. If you go to select any party, sales, will see the DMart is, okay, he's in a Karnataka. I'll just specify his GST number. So now I'm going to create one stock item. As already we have defined the tax rate, I don't want to disturb that. So I'll say applicable, yes. And I'll say exempt. Here you can see the option is type of supply. So if the type of supply by default, as you are in a stock item creation screen, if you say undefined also, it will consider as goods. If you want to specifically consider it as service, you can select as service, or else you can go ahead and if you pause any transaction as it is exempt, as you are already defined as exempt, if you select CGST or SGST or IGST, tax will not calculate because it's an exempt sales transaction you are done. So this will captured under GSTR 1 under nil rate, correct? Apart from that, if you select tax classification as nil rate or non-GST, correct? When we discussed for the stock item itself, you can configure as non-GST. If it is non-GST, make this option yes, and then the value will captured under non-GST here. If it is nil rate, so how to pass nil rate transaction? As I told, you can either create sales ledger specifically for that, or else you can override from allow modification of tax GST during entry. Here the classification comes, you can select as nil rate. If it is nil rate, the values will get captured here. Okay, these are all the simple transaction which you can try by downloading our preview version, and also we are keep updating our help file as well. Currently we have provided few articles under help which will allow you to configure, which will allow you to migrate. To start your building, we have provided transaction. However, there are many adjustment entries as well as types of transaction under GSTR 1, GSTR 2. Everything will be provided soon. Okay. Okay. Now we will see how the slab rate tax works. So there are commodities under GST which says below this amount no taxable, above this it is taxable. For example, footwear, it says below 500 no taxable, above 500 taxable. Hotel accommodation, if it is not 5-star, below 1000 no taxable, above 1000 it is taxable, right? So I'll create one stock item. Here in set GST, you have an option called calculation type, correct? So currently we have provided this for item. However, we are going to provide it for group as well. If you have a group of stock item for which you want to calculate as a slab wise, that is also we are going to provide. You need to select as on item rate. Immediately a next screen will open. You can say till 499 or 500 it is exempt. Above 500, leave the field blank, taxable. What is the taxable? You can say 5% of GST. Correct? Immediately SGST CGST is divided. Now if it is says, you can specify, or else you can leave the field blank. Now we will check making one transaction. Maybe refresh problem. I'll just pass one more transaction. Yeah, instead of rate I have specified in quantity, hence it was not. So if it is below 499, I'll pass one more transaction. It is not calculating, correct? So if it is above 499, the tax will calculate. This is how slab rate will work. The same concept even for hotel accommodation also. So one service bill I'll show you. If you want to pass a service bill, it should be item in. It should not be in item invoice mode, accounting invoice mode. Here, you are passing transaction to the party who is a registered dealer. Service ledger you are going to create. Assume that advertisement service. So here you are going to say applicable yes, and here yes, and sales taxable you can select. Correct? Here you can select as service. In ledger by default it will treated as service only. Even if it is undefined, if it is a ledger by default it treated as service only. However, if you want you can select as a service. So now if it is a service transaction, as we already selected as sales taxable, tax will be calculated. This is how you are going to pass the service transactions. Now we are end of the GSTR 1. So later we will take you through GSTR 2. So similar transaction except few discrete feature in GSTR 2. Apart from that, it is similar to GSTR 1. Fine. So now we are going to discuss about this tax liability on advance. So under GST law, if you are receiving advance from your customer, if the sales invoice is not made during the tax period, then you're supposed to raise the liability and pay to the department. Assume that in the month of July, on 15 July, you received advance from your customer. So if you are sure that you are not going to supply the goods before 31st July, if you are going to make sales transaction in the month of August, then the amount, advance amount, whatever you received, you had to calculate GST and you have to pay to the department. If you sure that you are going to make sales transaction, then advance receipt itself is not required. Just receive the advance and normal sales transaction you can do. However, you are going to pay. However, the liability will be raised in the month of July itself. Okay, whenever the tax period is getting changed. For example, received advance in July, you are making sales transaction in August. In this scenario, you have to raise the liability. How to do that? I'll show you. So now, assume that we are receiving advance on 15th of July. Cash or bank from the party Cool Joint, right? So here we have given option called Alt V Advance Receipt. Click on Advance Receipt. If you are sure that which stock you are issuing, then you can select the stock. Accordingly, tax will be calculated. If you are not sure during advance received, okay, then you have to select Sales Ledger. So for the sales ledger, as it is a accounting ledger, you need to enable the tax. If you are not sure what type of tax, by default it's supposed to be enabled, then we have given one more option called F12. Here, you just select the amount in the amount field, saying that if you are receiving 1 lakh advance, select 1 lakh, and rate of tax, you can specify 6 you can specify. So put together it will be 12,000. If it is cess, you can specify cess. So now you can see this is called booking entry. So once you accept this, the bill wise detail either should be advance or new reference. Okay, it should not be against or on account. It should be either advance or new reference. And more importantly, the party should be bill wise enabled. If this is not enabled, advance receipt to raise the liability entry cannot be done. The important information is bill wise bill should be enabled, and advance should be selected as bill wise reference. Okay. Now I am going to complete this advance entry. Once after this, if you go to GSTR1, let me create a new party. Advance receipt. Central and state. However, I see the advance of 1 lakh. So 12,000 tax. This is the booking entry where liability is not raised. This is just a booking entry to capture the value in GSTR1. If you go to balance sheet and under liability, that specific 6,000 will not show, because this is different entry, sales transaction. With regard to receipt entry, that 6,000 will not show. To raise that liability, end of the month, the user has to pass one journal adjustment entry. That journal is stat journal GST. Here is the third option, increase tax liability on account of advance receipt. Here you need to create one ledger called tax on advance under current asset. Other detail need not to enable. So as you know, it is 12,000. Specify the 12,000. So it is difficult for user to check each and every transaction what tax need to be specified during journal. So hence month end, whatever the value showing under advance tax liability, that amount we need to pass under CGST 6,000. SGST and CGST 6,000. So on 31st July, I pause this. After that, so user has to pay to the department. We will just make one stat payment as well for the month of July. It is CGST, including other tax we supposed to make. For the demo purpose, I am just showing you only the advance received amount. If it is through check, remaining details need to be specified. After this, as you raise the liability, you pay to the department. Next month, you are going to raise the sales transaction. Here, I'll select the party. As I received 1 lakh, I am going to make transaction of 1,50,000. So party has made only 1 lakh advance. Here, the tax amount also increased. However, the product value also increased. Now, against reference, I have to knock off that advance which I received. So 1 lakh I am going to knocking off. So remaining will be new reference. 68,000 is the balance supposed to receive from the party. So now, bypassing this transaction, immediately if you check GSTR 1 for the month of August, you can see below set of tax rate paid against advance. So this is the one which captures here, which you have made a transaction against receipt in previous month. Previous period advance receipt it shows here, which is linked to this, and the current month you made sales transaction 9,000, 9,000, 18,000, and 12,000 you already paid. So remaining amount anyhow you are going to pay in the month of August. So after this, you need to pass a receipt to receive remaining payment from party, which is normal receipt voucher you will receive. So which is knocked off against the pending. Important entry you need to pause here is the reversal of that adjustment entry. We paused debiting tax on advance. Now we are going to reverse that. So credit CGST up to 6,000 rupees, which you made adjustment, and CGST in SGST. Now if you select tax on advances, ensure that the balance will become 0. Okay. For the second journal, you need not to select any adjustment flag. It's a normal journal entry without any statutory information. So now for the month of August, whatever liability is there, including other transactions, so user has to pay to the department. Okay. If you check for the month of July, it shows only advance liability, correct? So if you check for the month of August, there is a link between advance, receipt, and set off. This is a set off entry. Okay. Somebody is asking, what if the sale bill is not created for the month of July? If it is created in the month of July, you need not to do all these transactions. If you are receiving advance on 1st July, if you are making sales transaction on 31st July, normal receipt sales, because you are going to pay whatever collected in the month of July itself, the CGST, SGST liability will rise. However, as you are making sales transaction next month, then you have to rise your liability as per the GST law. If you are receiving advance, not making transaction in the same tax period, then you have to rise the liability. So whatever the type of transaction, we will ensure all are part of our help file. So hence, we request you to refer our online help for more information. Here is the short video also we have created to migrate to 6.0, and you can do basic configuration and start doing your sales or purchase transactions. Okay. So we are creating more articles. So currently the basic articles are available. So please go through these articles. So now we will end for this GSTR1 and we'll start this GSTR2 transaction, which is for all the inward transaction. Now we discussed about all the outward transaction. Now we will discuss about all the inward and end with how to file the returns. Okay.